Lance Roberts here with 3 minutes on markets and money, talking about, well, chasing this market. Of course, when I was growing up, we always wanted to do stunts like Evel Knievel. And of course, we wanted to replicate the jump at Caesar's Palace. So, of course, we stole a bunch of neighbors' trash cans and did it. Of course, my father warned me. He says, doing this is going to have a bad result. And of course, it did. And ultimately, at the end of the day, after breaking my wrist, I completely understood what he meant. But this is the point where it comes to chasing markets. Currently right now, the market is extremely optimistic about the future. Right here, currently options traders are more long biased than they've been at just about any other point in history. And if we take a look at deviations of the markets on a daily basis, we're more than almost 12% deviated from long-term means, 225-day moving average, 52-week, a one-year moving average, almost 12.5% there, another 17.5% on a monthly moving average, 2-year monthly moving average. These are very long-term moving averages. Markets very extended from these long-term means, which typically align with reversions. Now, that doesn't mean massive bear markets. It could. This happened before in 2000, 2007, but it also aligns with corrections of 10 to 20%, sometimes a little bit more. But in any given year, you have corrections. And while this year seems that, well, it's just going to go straight up from here because of the Fed, in every year you have a correction of some sort, even during strongly trending markets. Look, and last year the markets were up 30%. That was great. The last time we had a market up 30% was in 2014, and the next 2 years the return was almost zero on a 2-year basis. So markets have to consolidate those big gains in the markets. And after a big gain last year, it would not be surprising to see the market chop around here for the next 12 to 18 months to consolidate that outsized gain and to really adopt the issues of economic growth, earnings, and of course, what's happening with coronavirus. Currently, on a technical basis, markets are extremely extended. Again, markets and participants just chasing the markets. I've got to be in. I don't want to miss out. Technical deviations of this magnitude, again, also tend to align with short-term corrections. So be a little cautious here with your money. Our RA Pro subscribers, we provide a couple of charts to them every week. Well, this is one of them that shows that deviations from long-term means. And if you look at this chart here at the bottom, almost every sector of the market is extremely overbought. Again, another kind of warning here short-term that markets have priced in a lot of long-term gains in the markets, at least for the moment. Yesterday, Julian Biddle, CFA, had a very interesting article on MarketWatch talking about the fact that the markets, the S&P is only pricing in about a 2% chance of recession, but economic indicators suggest about a 25% chance. So again, really just this over-optimistic view of the markets that nothing can really slow it down. But taking a look at earnings have been on a steady decline. In fact, FactSet has actually revised earnings down through 20 and through 21. So earnings estimates are getting lower. Yes, companies are beating earnings estimates, but they're beating lowered estimates, and these estimates continue to get revised down. And take a look here. The markets have been rallying up as earnings estimates have been falling. Again, this is the valuation gap we've got going on, and ultimately prices will catch up with earnings. This is the real risk to markets long term, and this is why professional investors manage risk. And we talk about this idea of managing risk because losing money and having to get back to even destroys your long-term ability to compound returns. And if you're supposed to be getting a 6% rate of return to grow your money for retirement, large chunks of losses that you have to make up. Also, you lose the time frame of growing that money. We discussed this chart yesterday in our article about investors just now getting back to even after a decade of losses from the last time. And here we are set up for another big decade of low return. So as an investor, be careful with your money. That's the whole point here. Markets are very extended. Pay attention to your money. Pay attention to what you do. Or skip by our website, realinvestmentadvice.com. Get our latest articles, blog posts, videos, and more. It's all there about helping you manage your money better. That's realinvestmentadvice.com. We'll see you next time.